Big, fat, red day in the market. You know what that means. I'm excited. Mo's excited. All the investors in our community who use our software are excited. The reason being is we like things on sale. A little bit of green here. Home improvement, telecom services, a few pharmaceutical, some healthcare.
Retail is up a little bit.
Where's retail? Oh, up
Home
here.
Depot,
Consumer
Walmart,
defensive,
McDonald's,
utilities.
oil.
But guys, the drivers of the market.
Yep. There's your
Right
Mag 7.
there. Your Mag 7 down big. The best one was Apple. Who's reporting today? Intel is reporting today. Amazon is reporting today. And we have the results for you right now. We're going to break down the results, earnings per share and revenue. And we're also going to break down the phallic symbol that I just drew right here by accident. And I see the guys in the back giggling. So I realized that that's what I just did, but that's okay.
Can you explain what phallic symbol is for those that don't understand?
I think they can interpret it from the picture there. So, guys, first let's report on Intel, a company that I own, that I've said for a long time is going to be a long turnaround process for the company. Don't buy a company just because I or somebody on the internet has it. In fact, don't buy a company just because Warren Buffett has it. We're here to teach a process of evaluating companies. Intel is losing money. They were expected to bring in $13.3 billion in revenue, and guess what they did? They beat that. No, sorry, they were expected to bring 13.02. Correct. They brought in 13.3. They beat. They're expected to lose 2 cents.
Yikes.
They lost 46 cents. Mo, do you have the earnings results there?
I have the breakdown here, and this is interesting. So overall, their net revenue is down 6% compared to last year.
Yet their stock is up
Their stock's
11.6% right now.
And it was up as much as 13% at one point in the last few minutes.
And by the way, there's also talks of Apple buying them.
Yeah.
Which I think is not a bad idea, but go ahead.
It's a bad idea. So client computing down 7%. Data center and AI up 9%. Let's see, Intel Foundry down 8%. I don't know.
Wow.
Yeah. Mobileye. Remember how big this Mobileye thing was?
Yeah.
Down 8%. Altera. Do you know what that is? I don't know off the top of my head.
So guys, here's the deal. With Intel, this is not for the faint of heart. Intel is, if it works, is going to be a long turnaround process. I don't think it's a bad idea for Apple, a company with huge cash reserves, to look at a company like Intel and then market cap of 91 billion, 92 billion, and say, maybe we take a look at it. Intel is going to have an issue going forward. The revenue is down 6% year over year. You know, the chip industry is a growing industry. It'll continue to grow for a long period of time. If Intel can at least get back to stable and growing again, this is a game changer for them. I want to make note. Analyst estimates, and again, these are analysts, they expect revenue back up to 90 billion in 4 or 5 years.
Damn.
Does that happen? I don't know. That's some big revenue growth. Mo, keep going.
So that Altera one, the reason I wanted to say it is down 44%.
Wow.
That was a big drop. And then other, when it comes to their other stuff that they're doing, down 24%.
Down 24%.
So a lot of down things in the revenue.
But guys, the stock is up 12%.
I do have some good news here.
Let's hear it.
One of the questions for me when I was invested in Intel was how much money are they going to get from this CHIPS Act? They were awarded $3 billion from the government. I think it was a $45 billion program or some nonsense. So
they've built 3 factories. They're building 3 factories, one in Germany, one in Arizona, one in Ohio, just on the street from us.
Yep. Them and Amazon Web Services are finalizing a multi-year, multi-billion-dollar commitment to expand company's existing partnership into some new chips.
So guys,
whatnot.
This is their EPS analyst estimates: $27, $16, $87, $324, $463. Multiply this by a 20 PE, you're at a $92 company. I don't know. We have no idea this is going to happen. I'm not going to lie to you. I wish it was this easy. I wish it was that easy. Intel, luckily, is in his industry where a rising tide raises all ships. They still have a good reputation for good chips. Now, you might sit there and say, no, they don't. Yeah, they actually do. Go look at it. They actually do. It's just an issue of, right now, the stock is down a lot, so people are worried about that.
Yeah. So expectations for the fourth quarter of revenue, 13.3 to 14.3 billion.
It's a big range.
Yeah. Gross margin, 36.5%.
Yeah, their gross margin's a lot lower than it used to be, too.
Yeah.
Any expectations of cash flow or earnings, or we're still pie in the sky on that one?
Don't have any information on that. Maybe they'll say it in their little speech that they do later on.
Okay. Amazon has also reported $158.9 billion versus an expectation of $157.2, and EPS of $1.43 versus expectations of $1.14. So they crushed. Guys, NASDAQ was down 2.76% today. Amazon was down 3.39. Now it's up 5.5%. Are these all-time highs, Mo? They're not. 201 back on July 8th. So they still got some room to go to all-time highs. But guys, I want to show you guys something on Amazon. Back in 2020, August of 2020, they hit a high of 175. 177 was their high there. So guys, I look at this and 177 again, 188 right here. July of 2021, they hit 188. They hit it again in November. That's 3 years of basically sideways movement for a company that's revenues up since 2021. Let's look at their revenue. They did 469, and in the last 12 months, they've done 604. So I look at this saying, guys, it's a company that's grown a lot, making more money. AWS is making more money, and the stock is sideways. Why? In the short run, stocks are a voting machine. In the long run, weighing machine. And guys, if you like the idea of getting these recaps on earnings, we do 3 or 4 or 5 videos a week on this channel recapping earnings, economy, reacting to things like that. So do me a favor, subscribe to the channel if you want to be a smarter human being. Am I right, Mo?
Yep.
You're smarter since you subscribed to the channel. Do you even subscribe to our channel?
I don't think so.
I really hope that's true.
Want to hear some of these numbers?
Yeah, let's hear 'em.
Net sales increased 11% compared to last year. North American sales increased by 9%. International increased by 12%.
This is a huge company, and they're increasing sales by 11%.
Amazon Web Services increased by 19%. Listen to this. Listen to the free cash flow. Increased to $47.7 billion for the trailing 12 months compared to $21.4 from the previous.
2.5 times almost.
Good God. And then there's some, I actually go to their website and look through these things. There's 23 bullet points of things that they did this quarter.
Can you do me a favor? What's their gross margin this last quarter? Is there a cost of goods sold? Because here's the reason. The reason I bring this up is Amazon's always owned my brain. I haven't seen the gross margin. People say, well, they reinvest. Well, that's not in the gross margin. That's in the bottom line. That's in the free cash flow. But the gross margin is just always so low. It's like car company margins. And I'm looking at this saying they've got huge potential in the advertising portion of their business, where Amazon sellers go in there and they bid on placements for their companies. Like if you go type in a product, the first 4 or 5 items will be sponsored items. They're like Google. They know that you're going to click on those top 3 items 85% of the time. Well, that was the number 10, 15 years ago. I don't know if it still is. And Mo, look at analyst estimates here. Over doubling their EPS for the next 4 or 5 years. I mean, massive growth there, and massive, 10, 11% growth on revenue, getting almost $1 trillion by 2028.
That's crazy.
Yeah, it's nuts. It's absolutely nuts. Wow. So I look at this thing to myself like, man, Amazon just freaking kills it. Now, one thing I have noticed is they report their cost of goods sold a lot different than Morningstar reports their cost of goods sold to us. Mm-hmm. So that's something, guys, that as you're doing research, like Morningstar is a data provider, and they give us data. And I look at it, seeing the numbers that Amazon reports in their 10K versus what Morningstar reports, it's a little screwy. My guess is it's some sort of combination of both. That Amazon's reporting it in their own way, which I can agree with to a certain element because there's certain profit margins they're going to hit. But I look at Amazon, they're up 5% now after hours. But before we get to Apple, guys, I want to talk to you about the market today. Big red day today. A couple people reported yesterday, even though they did well. Google, Microsoft, the stocks were still down, perplexing to me at times because a lot of them did very, very well. And Starbucks, ironically, was up after hours yesterday, even though they reported poorly. Mm-hmm. And Starbucks has an uphill fight there. Yeah. The market was down a lot today. This is the first month, October finished the first month since April that there was a down month in the market.
Wow.
Yeah. So we haven't been used to that. There's a lot of up and downs going here. Remember, we talk about this every Monday. Another reason to subscribe to this channel is every Monday we do a recap of the previous week. We talk about valuations and where the market stands. And the reality is the valuations stand much higher than historical. Could there be a reason for that? Sure, there could. There's a lot of reasons why that could happen. The question to ask yourself is, which ones are the right reasons and which ones are not? And if you're just blindly following that it is undervalued or overvalued, it's also about understanding why that is. And that's what we try to do on this channel. Is okay, why is it overvalued, undervalued? Why? What is being priced in there? Because remember, we had one of our great value investor friends, Gary, in yesterday, and he kept saying to me something about, when stock's selling for this, people are assuming this. And I say, Gary, stop. No one's assuming anything. They're looking at stock go up and down. What our job is is to sit there and say, based on where the price is relative to value, what has to happen for this to be justifiable? Like, for example, Mo, if Intel were at $1 today, like it just fell to $1 today, you got to sit there and say, what are their pieces and parts worth?
Yeah, exactly.
Right?
Exactly. What's the?
But we probably would have said that at $20 when the stock was at 75. We'd have said, hey, it fell at $20 today.
Sure.
What would you say?
It's all perspective.
But as you're watching it fall, it becomes very difficult emotionally.
Yeah.
It's so hard emotionally to watch stocks fall. And sometimes you're going to be wrong. A lot of times you're going to be wrong. But when you're right, hopefully that upswing happens. You know, I own 18 or 20 companies right now. And I'm very happy with my buy prices on them. But I'm not adding to them because very few of them have good pricing right now. And as the prices fall, Nike's been falling lately. And I've been selling puts on them at lower prices because I like the position of buying Nike around $70 a share. That's a great position, even 75 or lower. Now, don't do it just because I do. The big key is we're trying to teach that process because whether you agree with me on Nike or Starbucks doesn't matter. What matters is, do you apply the same philosophy of every investment, the present value of all the cash flows you're going to get? And how you value those cash flows is up to you. We're all going to differ on those things. Warren Buffett and Charlie Munger always said they differed on how they valued Berkshire Hathaway. But the point is, if you use the same kind of idea, margin of safety, and you look at paying a premium for great quality businesses, you'll probably do pretty well in life if you can stomach the emotional ups and downs. That's why we have the community. That's why we have our channel. We're sitting here trying to teach that because that, to me, is the most important part of successful investing. You have to be able to be okay being different. And unfortunately, being different means the stock is going this way. And most importantly would be when the stock is going this way, but the fundamentals is going this way. It's a lot rarer, but when it does happen, it's wonderful. I feel like I have that in a few positions that I own. Apple has reported. Mo, take it away.
Earnings per share of $1.64, beating expectations of $1.60. Revenue of $94.9 billion, beating expectations of $94.6 billion. Oh.
And they're down.
Yeah.
Not by much, but they're down. 0.8%. Let's see, 0.9. Come on, 1%.
So that was
1.5%.
That revenue that they reported was up 6% year over year.
Oh, wow, really?
Mm-hmm. That's a big jump.
That's a big increase.
Yeah.
But what was it compared to the previous year? Because I think they had a couple unusual quarters. So we're talking about 90.15 2 years ago. All right, so 95 point, whatever, 94.8 or whatever. It's a pretty good beat.
Yeah, it's a new September quarter record for revenue.
Guys, if you're expecting Apple to grow like crazy, it's not going to happen.
Oh, God.
It's hard to make outsized returns on companies that are the largest market cap companies in the world. However, if it gets boring on Apple, it's still a great company with a lot of potential cash flow and an ability with a lot of cash to buy back shares if the prices make sense. What are they saying in their quarterly report, Mo? Anything of interest?
They declared a cash dividend of 25 cents per share.
Yawn per quarter?
I don't know, to be honest.
Probably is, because $1 on 225 is like 0.45%. Yeah, it sounds about right.
That's about right. Okay.
And by the way, that piddly dividend yield.
I know.
$15 billion.
It's insane.
The company made $104 billion in the last year on free cash flow.
Yeah, there's not a lot out there. Tim Cook, he likes to say things rather than put them in writing typically. So he's going to talk about iPhone 16 lineup, the new watch, the new AirPods, the new health stuff, the Apple Intelligence, and the holiday lineup that's coming. And they announced a new computer yesterday or today.
So I'm looking forward to the Apple Vision goggles to be awesome.
Do you have them?
No.
Okay.
I'm waiting for it to become cheaper and and awesomer.
You mean you don't want to pay like $4,000 for them?
I don't think it was $4,000. I think it was like $3,300. So now they're almost down 2%. They were at 1.81 just seconds ago. Guys, this goes to show a double beat for a large company like this. You would think if you told me at the start of the day, hey, there's gonna be a double beat on Apple, I'd be like, oh, the market's gonna go crazy on it, and it's down. By the by the way, they're down more than they were today during a big tech sell-off. Even though they reported great earnings, they might hit 2%, 2.1% down. So guys, funny. Markets are irrational. That's it.
So funny.
We don't care about quarter-to-quarter results. That's what we're trying to teach here.
And I actually want you guys to just watch this stock because the press conference starts in less than 30 minutes.
Okay.
Watch it and see what happens when they start saying things.
Yeah.
Watch it go the other way.
How can a company this big lose what would now be about 4% of its value after beating on revenue and profit,
Right.
having record revenue in 2 years.
Yeah.
Guys, subscribe to the channel. I think you're going to learn a lot here. I really appreciate the support. I'll talk to you next time.